Hey everyone, welcome to the weekly review. And let's recap what happened last week. First, on the economic side, the thesis for this week was that we drop, and we did. But dropping more, it needed to have a jobs market rollover print. And on Tuesday, we had JOLTS, which was expected to be 9.7 million and came in 9.6. A meh print, meaning it wasn't the bad print I expected. And then on Wednesday, we had the ADP employment change, which had a huge bid from 140K expected to 296K. And this made it pretty clear that the jobs market was not rolling over. This is the main reason why I flipped back to bullish midweek. Then we had the Fed hike, as expected, nothing really interesting. And on Friday, we had the non-farm payrolls, again with a bid from 190K to 253. Non-employment would actually dropped from 3.6 to expected to actually from 3.5 to 3.5 to 3.4, and expected was 3.6. So the question you may have is, why did we get that bad of a first quarter GDP print? And the reason is this. Even though the jobs market was hot, we lost productivity. This sometimes happens when the number of workers increases because productivity is cost of labor uh, divided by output, and if the number of workers increased, that doesn't mean the productivity increased either necessarily. So usually you get a decrease in productivity while the new jobs get up to par. The new people getting jobs get up to par and have a good productivity. So this is the main reason why we lost. We got a not that good of a GDP print for Q1. Jobs market was hot, but productivity went down. Now back to SPY. It wasn't just that; it was the technicals as well, and I'll review what happened there. The thing I was looking at was this April 10th and 14th range, and then the April range. And if we start to zoom in, we see that this April low held as well. We had a weekly engulfing candle at some point. The low was 403.78 and we got to 403.74. So just barely below that. And then we had a strong bounce, which was to be expected. And I think we'd get that high on Friday, but whatever, doesn't really matter that much. And now we have the May range that looks like this. And I think this mid-May range that we have now will be a point to look out for in the future. We'll still look at the old ranges from time to time, but I think this will be the new main one. And then we have the May open, which is very important, like this. And why it's important is because it's a key pivot. So I expect it to be the next major resistance. And just look at what happened when we lost it. So we opened, we went up a bit, tried to go higher, we got rejected, lost the May top, back tested, May open, sorry, and then just flushed down. And now we will go up to it. Might get rejected. If we get rejected, we will drop to the mid range. If we don't, we go up, and the targets are the gap fills. So first of all, we have the 419.96 to 421.22, which is the gap fill. And assuming we even manage to break above that, it's this level 425, 25.50. And why this level is the most likely rejection point if we break above it is because of trapped sellers. So this is a demand zone, no, supply zone right now because of this gap down and drop. Anyone who bought in this area will have sell orders, or not everyone, but people will have sell orders. And as soon as we get into this range here, we will get a quick rejection down. Don't think we even hit it, but it's here as the target. And this being said, let us look at some other stuff that was important to see why I didn't think we would go down on the technical side. So first of all, moving averages and Bollinger Bands. Let's put it here. So this one is Bollinger Band 2, this one is Bollinger Band 3. And we were here, almost at the 50 MA and above a Bollinger 2 move. So even getting to 400 would have been a Bollinger 3 move, a 3 standard deviation move. And we had the 50 MA, the 100 MA, the 200 MA. So very, very unlikely that we can go below this point. If we go to the weekly, it was also the 20 MA on the weekly and 50 MA on the weekly at 395, but the more important one is 20 MA on the weekly at 401 point something. Then we also look at the AVWAPs. So we take this out, we don't need it anymore. We look at the AVWAPs and they're all on. February high, AVWAP from February high is 402.68. Unlikely that we break through. March low, AVWAP was 402.60. October low, AVWAP, this one was lower. This would have been the target if we broke below 400. Yearly AVWAP, sorry, this one, 400.94, and all-time high AVWAP, which was higher, but we broke below it and recaptured it in one single move. So the combination of all those moving averages, both on the daily and weekly, the AVWAPs, the horizontal support, that made it highly, highly, highly unlikely that we will break below this point. And now we go to the May range, and this is likely our range moving forward with targets the way I said them, this and this. And we also have a broadening formation here. I'll go to the lower time frame because it looks better and it's more it's easier to see. And if we look at it, this lines up pretty well with the 420 area. So I think we get a rejection in this 420 plus area between 420 and 425. But for the very short term, we might just see a retest down because we got the usual VIX crush on Friday. I expect we get a bit of a spike in VIX next week on Monday. That might give us this midpoint retest, and then we start to go up. Then the May open is the first target and a likely rejection point. If we get rejected, we will go back to the midpoint again. If we don't get rejected, we go up and we go to 420 to the 420 area. And if it's still bullish, we go even higher. This is where I expect we will be on Tuesday before the CPI print. And for the CPI print, let's open the forecaster. This is the inflation nowcasting. Target is 5.56 for core CPI, and the headline CPI is 5.12. Then we have Truflation, which looks like this, but I have this analogous, this 4-month delay analog between Fed CPI and Truflation CPI. The 4-month seems to be the best comparison. And for next week, next week, inflation. They still remain for last week, no. 3-star. Okay, inflation rate year over year forecast is 4.9, consensus is 5. Last month it was still 5. I don't think that will happen. It seems that would be a very hot print. If we get 5% or higher on the CPI print, it's bearish. The higher above 5, the more bearish it is. But even 5, I consider to be a very bearish print. Now, looking at this comparison, the difference between the CPI, the Fed print, and the Truflation delayed version has been relatively stable. The biggest difference was half a percentage point. The expected print for this week is 4.20. Even assuming we had the maximum deviation, which is half a percent, it will still mean we get a 4.7 for CPI, which would be bullish. And this is what I think will happen. So a bullish CPI, then we go to 420, maybe we go even higher. It depends on other stuff as well. Now, the other reasons why I think we go up is in the post I made on Thursday, I think, or Wednesday, I don't remember exactly. I mentioned IWM hitting the bottom of the range. This is very similar to a lot of many other individual names that look like this, and expectation is that they will go higher. And this will give us either a blow off top or an actual bull market. Because if IWM manages to go to the top here and then maybe even breaks out, this is a true bull market. Nothing will stop us. Watch IWM. If IWM recovers and goes up in a meaningful way, then we are actually in a bull phase. And when IWM goes up, everything goes up. And lots of names look like this, like CLF getting to the bottom of the range. I don't know, Sophie getting to the bottom of the range here as well. Zim getting to the bottom of the range and expected to go up again. Like the AA, again, bottom of the range, bullish divergence, expected to go up. FCX, a lot of these material names look like this, bottom of this range, and even commodities like FCS is copper. And look at copper with this nice bullish divergence, second low at this point compared to this one, multiple weeks rejection here, so this looks quite promising and constructive. Even oil, retest of the lows here, this might be our range between this point and this point, and it hit the bottom of the range, bounced strongly. Now it might go to the top of it again. We'll see if it plays out like this. But many individual names look like this, and they are quite bullish. The setup is quite bullish. That doesn't mean we go crazy. I expect this. My forecast is until May OPEX. Don't know what happens afterwards. I still have a bearish bias beyond that, but for now it's looking quite constructive, and I want to see how high these things go, because let's take FCX for example. This could still be bearish. Like yes, we get this part here for May OPEX, but then if we make a lower high, this becomes bearish, or you can also consider something like this. Like we go here, we get to the trend line, get rejected, start going down again, and we just continue in like a bearish channel. If we make this a channel, something like this, and it does this, goes down, like this could has potential to go to as low as 2025, something like that. Or let's do it on an index, so IWM. IWM could, I still would like to see that spring type week of move. Let's say we go back here, maybe midpoint to 180 plus a bit, then we start going down again, and we get that spring move to 155, and then it starts going up. Like this is still possible. It depends how high it will go, and if everything makes a lower high across the board, it's not too bullish for the summer. But this can still be constructive. We don't know yet. For now, bullish until May OPEX, assuming a cold CPI print, which I think will happen, and that's kind of it. So this is it for the market. Let's show it again to get an idea. Retest with the midpoint, we go back up. This we are at 415-ish before the CPI print. Then the CPI print comes, we go up to 420 plus, or we go back to the midpoint. Expect this low area. 400 should be our support. Like no matter what, even if the CPI print is hot, 400 will be support, and it's a buy. Buy 400, and we will move in this area for the longer term. So sell 420, buy 400, repeat until proven wrong. Okay, let's talk a bit about the mega caps now. And we have Tesla, which is still expected to go to 180 and then to 200 if it breaks above that. OI wise, so we are at 170. 170 is here. It's a bit of a ramp above to 180. Also puts to burn. This gap here is not very encouraging, so I don't think it will actually go to 200 between 180 and 200, but it's plausible. Looking at options activity, we still see this kind of volume all the time on Tesla, which deep in the money puts for January 2024. But short-term volume is bullish. We will see what happens. Then Apple with a big earnings move. It has a nice ramp going into next week. Let's look at OI. So I also said it last week. I think it would be very fitting if the blow-off move makes a new all-time high for Apple, and then we get the next phase of the bear market, and we get a panic drop all the way down to there. But for now, Apple is 173, so around here. It still has this nice ramp up of OI up to 180. After 180, it gets very much more difficult. And I think it's doable for the short term, even though we don't have puts here, because the levels 175 and 180 are very, very big on the OI side for calls. So it's more than manageable and would be fitting for the end of the market blow off top. Volume wise, looking decent. No really no bearish volume except for June, but delta wise it's positive as well. NVDA, not a lot happening to NVIDIA either. Like it got to 280 here to 90. The difference between NVIDIA and Apple is I'm much more convinced that Apple can go the mile than NVIDIA. NVIDIA, even though it's at 290, uh, this level, this 290 level, is the biggest one for next week, and the following one as OI, while 300 is not. So I don't think it's. I mean, it's possible that Nvidia goes to 300 and then stops, but it's a lot less likely than for Apple. What I think happens for semis in particular is everything except Nvidia goes up. Like TSM looks amazing. It's in this low here, bounced here a bit, bullish divergence. It has the potential to go up quite a lot, at least to 90 to test this trend line. AMD, same kind of situation. Qualcomm's looks amazing as well. It went all the way down to this demand area and bounced quickly from it. And we can make this a range now. Like we can say this is the range. This one goes away. This is the second level. So Qualcomm to 113, maybe even higher, could do something like a backtest here and still be bearish for the longer term because it's still a lower high, and we'll see afterwards. But I think we go to 120 relatively quickly for Qualcomm. What else? Marvel hit the bottom of the range. TXN, bottom of the range here.
and expected to go up. So semis are looking good, but not NVDA. NVDA is too overextended. It might go up to 300 in tandem, but I would expect it to underperform relative to the other semi names. I like Qualcomm the most out of all of this, and TSM, sorry, Qualcomm and TSM. And looking at volume, let's see, quite a bit of volume to 290. Bearish for January 2024. Not that interesting. Okay, so next, who was it? I'll go Google and Amazon in tandem. Google I like a lot. Google also has two stock, and we are at 105, and we are here, 105. We just flipped this 105 level, which is big, and we will get magneted to 110. The interesting thing about Google was, or one of the Googles, was this. There was a huge spike in 120C for June. So this looks quite promising. Maybe it was a combo buy between this, and this. So maybe it was buy puts, sell calls or something like that. I don't know. But it was looking quite promising based on that. And 105. This is again quite promising. We can get to 410, especially since next week we have a bit of an OI spike on 106. So if we can get to 410, we can potentially get to 420 between the two. And also this bullish pennant here, we wanted to recapture this level, support, and then on the breakout, I think it has the potential to get to 120 relatively quickly. I expect Apple to outperform, but Meta with NVDA, not Tesla not do that well. Like I think Google and Amazon are the top picks for next week. Amazon, same kind of thing. We have this large trend line, long-term trend line, the bear market trend line for Amazon, which is looking like it's breaking through as well. And it has the potential to get to 120 as well. It has a nice ramp going into it. It's Google and Amazon are the two mega caps which haven't exploded up recently, and they might catch up. And this is the OI ramp, so we are at 105, and quite a nice OI ramp into 120 here, with some puts to burn as well. Volume wise, it's mixed. I don't know what the fuck this is. I'm assuming it was either a put spread, but don't know if it was sold or bought at 90. It seems quite far out of the money, and it's for June 16th. Quite a bit of in the money puts as well, but again, don't know if that was bought or sold. I'm assuming they were bought. So 150 for June. This is 190 for June as well. Strange, no idea how to read into that. Then Microsoft. So for Microsoft, its target is between 315 and 320. Biggest level here with a lot of OI for May in this red here. So I'm assuming this will be a magnet, but it will lose steam between 315 and 320, and I think that's going to be the top. So this is actually the target, 315, but I'm assuming a bit of an overshoot if things are bullish, and then a larger move down to fill the earnings gap. Meta, same kind of situation. That 250 level remains the target. Don't think you can get above it in a substantial way. We are 232, so around here. This 250 huge OI level is calling for us. It still has a few puts to burn. So again, go to 250, overshoot a bit, and then reverse down. Especially because all this delta, look at all this delta that would be expiring for Meta in May, on the May expiration. Huge. Okay, let's look at Netflix as well for the first time. Netflix is more complicated. So we have this pennant. It can break above, it can break down. I think it's 70-30 that it will break down. And the reason is OI. So we are at 322. So we are here. And we have a descending OI profile for calls going into 400, which makes it unreliable. But 330 is almost certainly going to be hit because it has a lot of OI for May in red, but it's a pretty big level with both puts and calls, so I think it's going to become resistance. And when we get to it and then reverse down, the target is most likely 270-ish, 270 to 280, something like this, between this and this. Could go even lower, but we'll see. So the final level would be 250, but for now I think we go to 330, overshoot a bit, get to this trend line, get rejected, go back down, maybe try one last time to go up, and then break down and do this drop to 70 to 80. I don't know the exact level, but I would assume to 280 to be the support. Okay, and SOM. So SOM played nearly exactly as I thought it would. We got the push up for earnings to this level, and then got rejected and dropped. I thought it would take a bit longer, but whatever. We nearly hit the trend line. Now we're bouncing and we're turning back up. The volume is super bullish, and we are at 108. So around here, the low was 117. No, not this one. 105. So 105, this was the low, and now we're going back up. Lots of OI to, I think we get back to 120 by May OPEX. And then lots of delta expires. We will see afterwards. Might not actually make it to, why did I put it that way? So 110. 110 is for sure, 115. No, I think we go to 120. So more like this, not necessarily 120, but above 115 for sure. And I still have this prediction for the longer term, in which we eventually get a large breakdown in everything. Okay, that's it for this week, guys. See you next week. Have a good day. Bye bye.